Where do you see those opportunities in Asia?
Yeah, the fact is that when we look at some of the opportunities and what we're seeing on the ground right now, what we expect to see actually is that within Asia in particular, when we look at places like China, because of the fact that the opportunities when it comes to markets underperforming, valuations when it comes to right now, valuations now trading well below historical averages, both onshore as well as offshores. We think that there's definitely opportunities there, especially when we look at the monetary policy divergence between what China is expected to do and what the U.S. is expected to do. You're definitely seeing opportunities and signs within China. And of course, if we do get to a point where stagflation does happen, and we saw that in the 70s, and particularly when we saw that back in the 70s, what particular asset classes did well, particularly on the equity side, we saw small caps as well as value stocks outperforming during that period of time.
How did Asian REITs do?
Asian REITs in particular, when we're in a cycle where we saw a rise within the U.S. 10-year Treasuries by 100 basis points, and we've seen this happening, 4 times over the past 17 to 18 years. Every single time, Asian REITs actually, had positive returns. We saw that, specifically when we had the Trump tax cuts. We saw that specifically when we had the taper tantrum. We had that post-GFC. And in these particular periods, and even sort of, in the earlier cycles when we had that China boom, in each of these cycles, we definitely did see Asian REITs perform very well. And in addition to Asian REITs, we also saw Asian high-yield bonds actually doing quite well as well during this scenario.
Tech and growth have been outperforming in this kind of new leg of that rally. Do you see that dominating still over value, or do you still see value outperforming in Asia?
It depends on areas, right? The fact is that, in particular, when we look at places like China, we definitely do see opportunities within the tech as well as within the growth side, because the fact is that, they have underperformed quite a bit in China. Of course, the rest of the world, things are a little bit different. And again, it coincides with specifically, where do we expect to see growth coming in at? And again, whether or not inflation continues to be a key disturbance in terms of, sort of economic activity. So these are going to be very important things. And of course, no one wants to see stagflation. And if it does happen, then, we do have to be a bit more cautious and be a bit more mindful as to some of the outcomes.
In terms of gauging risk, how much are you keeping your powder dry at the moment? Are you increasing cash buffers right now? Would you be recommending that little bit more risk aversion?
Not at the moment. When we look at specifically from our asset allocation team, what they're looking at right now is they're more sort of neutral or slightly reducing equity positions, given some of the uncertainty as to what's going on right now. But the fact is that there's definitely a lot more opportunities, especially within the equity space. As I mentioned earlier, within China, there's a lot of opportunities, and even within other parts of Asian markets as well, there's quite a bit of opportunities. So you have to be a bit more careful and mindful, specifically whether or not do you want to add a significant lot more exposure towards equities. Well, the fact is that, we need to see more signs of, better maybe economic progress, whether or not inflation, starts to, starts to reduce a bit. Those are going to be important things we need to continue to monitor before, we're going to be a lot more bullish when it comes to significantly increasing exposure towards equities.